All right, welcome to the daily market recap for Wednesday, September 17th. In this video, I'll be taking a look at the action today from the indexes, the liquid leaders, industry ETFs, then end the video with long and short setups like I do with every daily recap. So if you guys enjoy the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comments. Getting to the NASDAQ first, I hope everyone survived the FOMC meeting. I hope they survived the 12-minute bear market that we had after Jerome Powell announced a quarter basis point cut to interest rates. We had a lot of volatility, but overall, the market, if you just looked at the closing price, you would have not seen any volatility because NASDAQ was down only 0.2%. We did have an undercut of the 5-day moving average. The support gap got all the way down to the 10-day, bounced right at that level, reclaimed both of those key spots, and then closed back over the 5-day moving average. So a lot of volatility intraday, but really no change in the overall trend. The S&P 500, similar action, undercut the 10-day moving average, recaptured the 5 and the support gap by the end of the day, finishing down only 0.12%. The IWO, which is the growth stocks of the Russell 2000, a lot more volatility, initially to the upside after the rate cut was announced. Unfortunately, kind of squatted, bounced at the 10-day moving average, ended up closing back over the support gap in the 5-day. And now we're just in this range, bouncing between resistance gap overhead, support gap below. Whichever direction we close over, I kind of expect the next trend to be after a big expansion bar on September 11th, then just chop from that point. It's time to choose a direction. So we'll see how that plays out over the rest of the week. ARKK, good sign of strength today. Quick undercut of the 5-day into that support gap, just the top part of it. Rallied up and then closed super well. And now really looks like we're just breaking out of this consolidation that let the 50-day moving average catch up. Using IWO and ARKK as kind of risk on parameters or risk on indicators, they're both above their 5-day moving average. Until that changes, the trend is up, momentum is up, and I want to stay on that side. Then using IBIT as a way to track Bitcoin, a little bit of volatility to get today. Undercut yesterday's low, got to the 10-day moving average, but then closed over that 5 and 50-day moving average. If that's the low of the pullback and then we resolve higher, I wouldn't be too surprised there. But a deeper pullback into kind of like the 20-day or even this like pivot retest, I think would be perfectly healthy overall for the setup. Ideally, we do go higher and we just keep the momentum going, though. Next, we have the 9 liquid leaders. Let's sort it by price percent change today. And if it's a day that ends in Y, the stock BE is going to be up a bunch, up another 8.7%. Volume is ticking up. We're getting pretty extended in the short term, but again, like if you're over the 5-day moving average, good things tend to happen in momentum markets like we're in right now. ALAB, awesome price action. A lot of semiconductors were weak today with NVIDIA and AMD. Not the case for ALAB. A little bit of a shakeout during that FOMC volatility to the 5-day moving average. Bounced, closed right near the high of the day. Just a phenomenal chart and definitely one to go back and kind of go bar by bar and study because these are the types of names that you want to find a way into. Alibaba, Chinese stocks continue their massive breakout from the 3.5-year base that we've been covering on this channel for months and months now to get prepared for this move. And it's happening right now. I wouldn't be surprised if we do, now that everyone is starting to take note, kind of pull back into the 10-day moving average, something like that. But really just awesome accumulation here. Massive volume bars to the upside, really just extending the gains here and then zooming out like we just broke out of this 3.5-year base. So there should be plenty of room to the upside. APP is next, up another 0.4%, new all-time high, bounced to the 5-day moving average after taking out yesterday's low, closed decently in the range. I have alerts set at the 10-day moving average, and we'll be watching this support gap. It's not going to be one of the watch list stocks because I think it'll need a day or two to get there, but a key spot that I'm watching for in that name. Reddit, lots of volatility today, even before the Fed meeting. I didn't see if there was any news on it, but quick shakeout of the 5-day. the 10-day, the support gap, rallied back up and closed flat on the day, made new all-time highs. Spot to watch that 10-day and support gap area. Another stock that's not going to be on the watch list, but that's a key spot that I would be watching for. CRDO basically flat on the day, quick undercut of some previous lows in the 5-day moving average, not doing anything wrong. I did add OKLO to the list. Probably should have done that yesterday instead of Reddit. They're both very strong stocks, but I did kick out AVGO because it's had some weakness. Now this, like, it's not actually doing anything horribly wrong. We have a small gap down, pull back into the 10-day moving average. We're just in such a strong market right now that, I mean, if you're pulling back to the 10-day and there's other stocks that aren't, then they deserve a spot on the leaders list. And OKLO with the nuclear and uranium themes kind of pumping, I think it's good to have at least one of those stocks on this list. While we already have CRDO and ALAB for the same group that AVGO is in. Google, like the main mega cap that I'm watching, shake out of the 5-day moving average, closed a little down 0.7%, but low volume consolidation days over the 5-day moving average, usually a bullish sign. Then finally, CLS, little volatility today into the 10-day moving average, bounced and closed at the 5-day. I think that this is still just kind of forming up a little box here before the next leg higher. Getting into some industry ETFs, first up is KWEB. That was the leader of the market today, up 2.8%. This is a Chinese internet ETF. And once again, we'll go to the weekly chart, and you could just see 3.5 year base breakout on big volume. We're continuing that move this week. We're only halfway through the week, already halfway through the volume. Wouldn't be surprised if we eventually do pull back into kind of the 40 range, the 20-day EMA, and then that would be a spot to kind of reload the boat on some Chinese equity positions because you very, very, very rarely do you break out of a base that long, 3.5 years, and don't have sizable moves from that point. And we know Chinese equities do extremely well under Trump's first year of the presidency. The last time he was president, the first year, KWEB was up 75%. So we have a lot of things going for Chinese equities right now, and that's where I want a lot of my money to be in. Next, we have XLF, a financial ETF. Great undercut of the 20-day moving average. Gap up today, open on the low, close. Is this a new all-time high close? I think it is. Nothing bearish about that. And really, as long as financials are intact, I think the market is fine. And what I would be looking for is a close under the 20-day EMA as a potential like breakout, like a failed breakout move. But that hasn't happened yet. So I have alerts down here to see and get a feel of if we're seeing that pressure in the market. But it's not there yet. Momentum still to the upside. Couple other groups to focus on. TAN, solar ETF, that's pretty rate sensitive. Little uppercut and fail of the resistance gap, but still closed over the 5-day moving average. IGV, software ETF, good undercut of the top support gap, rallied back up over the 5-day, building out a little handle after this cup. Very quality action there. XLE, I think this is a group to focus on because we haven't focused on it for a very long time, but it's been showing really quality relative strength lately. Higher low off the 50-day moving average, higher low off the 20-day EMA, gap up yesterday, solid action today. So digging into that XLE ETF, which you can do by just clicking on the H for holdings in Deep View. And then you see XOM, really big base, CVX over the moving averages. COP is kind of weak, but some other names to kind of focus on. I need to spend a little bit more time going through that list and getting more familiar with that. I do have one kind of oil and gas name on the watch list, though. What else? Nuclear, NLR. Quiet consolidation day over the 5-day moving average, not doing anything wrong after that big ignite bar on Monday. Uh, XBI biotech ETF, pretty disappointing action. I do have a position in LABU. Got up to the resistance gap, got up to the previous highs, failed right at that level, closed at the low of the day. And now this does look ugly. If we follow through to the downside, that would kind of confirm this reversal. But a lot of the times we get like these squats and then they followed it up with a gap up. And anyone who got stopped out or just panic sold on the weakness would then have to chase it back up. So I'll be using a close under the 20-day EMA kind of as my stop. If we close like right on it, I'll probably give it another day because I'm in from so much lower down from August 12th. Uh, like I said in earlier videos, if you're in something that the 200-day moving average is just going flat or like just starting to trend up, you have to expect a lot of volatility because there's going to be overhead supply. So it doesn't shock me that we got the action that we did today. It's a little disappointing, but not the end of the world. Gold miners, which has been on a monster streak, closed under the 5-day moving average again, down 0.5%. Semiconductors, a little bit weak with a little gap down, still closed over the 5-day moving average after a 10-day moving average bounce. Anything else here? ITB, I thought home builders was actually going to respond much better to the rate cut, but Powell did say that like home builders and the housing market is not very strong right now. And I think some of the commentary s- kind of push this a little bit lower than some other groups. But um, yeah, we'll see if it follows through the downside or if we can start to build like a higher low in here. Getting into the long setups, I got 15 and 10 short setups. So a lot of setups to cover. I'll be quick on these. NBIS, really powerful stock that had a secondary offering after a 49% move, basically has been soaking up that offering into the 5-day moving average. Nice consolidation on declining volume. Today, when we had positive price action of 5.2%, it came with a tick up in volume, which is exactly kind of the volume pattern that you want to see. What I'm hoping for is a gap down at the open and then a green to red move as the entry. And then the stop would be the 5-day moving average on this. This is very much like a momentum type play. We're in a momentum market. I want to get in with a tight stop and be right away or wrong right away and limit my risk. Next, we have SOUN. This was viable today. I didn't take any trades before the FOMC meeting. Just wanted to see how everything played out. But good action today. Really nice base here and super high ADR, 7.4%. So if we go full on like FOMO market at this point, I could see this name making some very quick moves. Would just be looking through 1515, couple previous days highs as the entry. Stop would be the 5-day moving average on that one. TEM, another test and hold of the 10-day moving average. This stock loves to just like pull into the 10-day and then bounce from there. So that's exactly the spot that we'll watch for. Just a little pullback into 83.60, manage our risk against the low of the day. And as it comes down, I'm not going to be buying on weakness. I want to be buying after it kind of curls up and shows some sign of strength. It could be 5-minute bar coming back up, but I want some sign that the sellers are gone before it turns back up. A gap up opening range break could work because we're just so close to all-time highs, like at $90. A lot of people would probably take that instead of the pullback buy. Do whatever works best for you. But this is one of those names that can move very quickly in a short amount of time. ADR 7%. This was on the watch list coming into the day. Just same spot, looking at that 10-day moving average and gap zone undercut. That would be a higher low overall in the uptrend. RKT thought this was going to be a little bit weaker with home builders being so weak, but it's kind of like finance and home builders put together. Closed over the 5-day moving average after a higher low undercut of the support gap. Looking for just another pullback into that 10-day into the support gap low right around 2050 as the entry. The stop would be the low of the pullback here. PAAS, about day 4 of this pullback. First time you test the 20-day moving average and a gap zone after making new highs. That's like an automatic spot that I will be focused on. So that 3465-ish area is where I have alerts. And we'll be looking for an undercut and reclaim of that area. Stop would be whatever the low of the day is or 1%. KSS, cold retail stocks have been doing pretty well. AEO, KSS, what's the other one? Macy's, really strong price action lately. And this kind of does look like Celsius if you look at that chart, how that bottomed, where it had a big gap up, that got kind of sold off into, and eventually we didn't follow through the downside, making new lows, but we actually put in a higher low and then started to trend up. Exactly what Celsius did as well. Here, just looking for a pullback into the 10-day moving average, into the high volume close from earnings as a potential entry. Stop would be that 20-day EMA. BSAT, one of the more powerful stocks in the market, went from 8 to 17, consolidated, then went from 17 to 27, consolidated, pushed over that HVC area, and now just kind of just grinds higher. Looking for an undercut of the gap zone at 30.50 as a potential entry. Stop would be the 20-day EMA on that. AAOI, kind of similar to SOUN with the base. I think this is a little bit, yeah, a little bit faster moving at 8.4%. But it really has the ability to make massive moves, like from $6 up to $46 in 2 months back in 2024. Stocks like that, when we're in a market like we're in right now, they're going to get more of my attention. A couple different ways to play this. If you want to buy it on strength, I personally like am not going to, just because we have this resistance gap here, meaning we have evidence that sellers are in this zone. What I would love to see is like a gap down in the market, a little shakeout, little panic, pull back into the 10-day moving average and support gap for a higher low overall. And that would be a really, really nice spot that I would try to size up like big time on, and then just manage my risk against like the previous day's low here. NXT covered solar stocks. I think that's a group to focus on still in the second half of this year, especially as ENPH is just getting over the 50-day. FSLR is starting to work pretty well. But NXT is the IPO that's at all-time highs, like just off it by a couple percent. We had a nice gap up today, a little bit of strength there. Looking for an undercut of this gap zone, pull into the 20-day moving average as the entry. Stop would be the low of the pullback here from September 15th. MSOS, didn't want to cover this in the ETF list because it's on my watch list. But this is the cannabis ETF. Had a big move from $2 up to $6, so about a 200% move. From there, lost the 20-day, bounced, fell even further, and now we're starting to turn things around a bit. Nice day yesterday, up 6.8%. Inside candle today on low volume. And now we've got a pivot to work with right around 450 as the entry. Stop would be the low of the day. PARR, this is an oil and gas stock. Uh, and one of the, I would say the leaders, just because the ADR is a lot higher, it's a little bit thinner, trades $55 million dollars a day, ADR at 5.5, but moved from $12 up to $35. Had this one ugly day on earnings that I guess got soaked up right away. Shook out the 20-day moving average on Monday, gap and go yesterday, inside candle today. You can play this through today's high as an entry or a pullback into the 20-day moving average in gap zone. That's one where I would size up a little bit more if we got there. Play that versus the 50-day moving average. If you're buying it on strength, then today's low would be the stop. Next is kind of a fun stock, a like more risk on type market stock, and that's FUBO, Fubo. I think this was like 18% short interest on the name. Has the ability to make massive moves. The year started with this up 250% in one day. And very similar to the quantum names, had a big move and then just went sideways for a year. And we can look at some of these quantum names. It's not the same thing. Fubo is like a television company. But similar idea where you make a big move, you base for a year, and then you make really quick action. RGTI from 15 up to 22, IONQ, massive cup, big base, breakout, all that good stuff. So back to Fubo here. Really like how we got up to the resistance gap and then pulled back 2 days on lighter volume than the rally. This I would be looking for a little gap up, opening range break as the buy point, or like quick undercut of today's low, the 10-day moving average, reclaim that at 414. That would be the entry. Then stop would be whatever the low of the day is there. If you're buying it on strength, again, the low or the stop would be today's low. MNSO, talking about all the Chinese equities that are breaking out, BILI. Um, we saw Alibaba, TEM looks really good as well. Next might be MNSO, just looking to play the theme. Big move up on earnings, up 20%. Then two waves of consolidation, really tight action. Today, not a ton of strength while the rest of the Chinese stocks were going, but still would be watching this through today's high. Stop stop. I would do yesterday's low, about what would that be, 2% or so, because the KWEB ETF is a little extended here, so there's potential that this is just showing relative weakness while the rest of the group is participating, or it's just going to be the next name that gets going. So if it's a weak stock, I still want to manage my risk relatively tight, so only want to give it about 2%, um, and then prove me wrong on that. RSI covered this yesterday. I think this is like a gambling stock, but awesome move off the low from $3 up to $22 over the last 2 years, pulling into the 20-day moving average and support gap for the first time after making new highs. Always a spot that I'll be watching for. Only downside is it only trades $30 million a share or a day, so that's pretty thin. Looking for an undercut of the support gap to the 20-day moving average, then the stop would be the low of the pullback through the pivot here at 2150, also buyable. Stop would be the 20-day in the support gap there. Short setups. I'm probably going to get a lot of flack for this. First one, Nvidia, the king of the market, not really acting like it lately. We have four unfilled gap downs now. One of them being a resistance gap here, where we had that big shakeout on the indexes September 5th, rallied up from there, and the indexes have been flying higher. Leading stocks flying higher. Uh, leading semiconductor stocks flying higher. Nvidia not doing that. We rallied up, perfect uppercut and fail the resistance gap here. Then another gap down yesterday, another gap down today. I think there is, I guess it's only three gap downs. Either way, lots of weakness in this name and already like pretty extended off the lows. So could be turning here. I wouldn't want to short this on weakness because it's already kind of getting down to the previous lows here. Would want to see a rally in this uppercut and fail of the gap zone of the 50-day moving average of 175 as a lower high overall. That would be the short, and then I'd manage my risk just over the previous gap here at like 178. Next, we have MSTR, and I think this probably has more room to the upside. Like I think the A plus spot to short and really size up would be a test of the 200-day moving average and this resistance gap, especially because Bitcoin itself seems to be like pretty strong of late. This just cannot get out of this range. But we had a perfect undercut of the support gap on September 4th. Since then, you see every single lower wick getting absorbed here. So when you have that and the market doesn't fall apart, my guess is we're going to kind of resolve this consolidation higher for the time being. But we do have the resistance gap. We did have the uppercut and fail of the 20-day EMA today and some weakness today, down, what was this, 1.6%, while the indexes were flat or basically flat. So one spot to watch is that 336 area, the resistance gap area. Then you can manage your risk against the high of today. Um, but really, I think the spot is going to be a rally up to the 200 day. BE, strongest stock in the market, just getting a little crazy here. Now that we have another big up day, I will be looking for a gap up, big like morning push, and then reversal, loss of the daily view app. That would be my entry. Stop would be the high of the day. One more like ignite bar like this would be like a perfect way to set it up on Friday. We'll see if we get it. This is just getting crazy extended and we're seeing a volume pickup, but we haven't seen insane volume. Like for blow off tops, like let's go back to MSTR really quick. MSTR back when it had its blow off top, November 21st, massive volume. The day before, highest volume ever. Day before that, highest volume ever. So we're not quite there on a volume standpoint with BE. which is why I think it could have another day, maybe a day and a half of going up before blowing off. But I'll start to look for this trade going into tomorrow. LITE, kind of similar idea, has already made just a huge move from 50 up to 170. Unfilled gap down today on a pickup in volume. We look for a mini rally and then a loss of the daily VWAP to short versus the high. DAR, this was on the watch list, I think 2 days ago. Another uppercut and fail of the 50-day or 20-day EMA, close near the low of the day. Just a move through these lows on weakness is shortable. I would use the 10-day moving average as the stop. NEGG very much looks like a bear flag to me. Rallied from $3 up to 130, pulled back to a support gap at $30. So from 130 to 30 in 7 or 8 trading days. I think you could argue this either way. You could say, hey, we're in a momentum market. This built in a higher low, got tight, and is starting to push out this range. I wouldn't argue with you. If I were to trade it long, I'd be very careful if we get an uppercut and fail of the resistance gap of the 20-day EMA of $50. That would be a spot that I would watch as a potential short. So an uppercut and failure of that area. Also, wait for the price to get under the daily VWAP to short. Just with these momentum names, you don't want to be fighting any type of trend because it shows you from $3 to 130, it can squeeze. So if you want to play this on the long side, I think you can. Just make sure you manage your risk with the stop. LIF, kind of reminding me of Sezzle, how it topped. Big move up, pretty big gap down right off the highs, rallied back into the resistance gap twice and failed at that area. Tight day on low volume. So just a push through today's low is the short entry. Stop would be today's high. We've also been kind of like uppercutting and failing at $100. So a move back under 100, stop over 100 would be good risk management there. GEO, major downtrend in this name. Lost the 200-day moving average. That's sloping down. 50 days sloping down. We had a big move up on September 11th, followed by a gap down 4%. This looks like it's just ready to move lower. So push through today's low is the entry. Stop would be the 5-day moving average. The next two or the next one, Root, is very similar. We had a big flush on earnings down 26%. Mini rally back up to 102, so over that $100 round number. Now we've lost that area. General weakness today, closing back under the 5, the 10, the 20-day moving average. Just looking for follow through on that. Stop would be the 5-day moving average. And then ZEPP, very similar to NEGG. Think you could trade this from the long side or the short side. Really nice consolidation in here. And from consolidation comes expansion in one direction or the other. Today we had an inside day on maybe the lightest volume in the whole trend. And because we're in a momentum market, I honestly think this is probably going to break to the upside first. We saw NEGG go to 130. This is at 50 right now, 47. So still some room. We haven't had the overwhelming volume that we saw with NEGG when it topped or like other tops in speculative names. So I would only play this on weakness, like a move through the 20-day moving average, through yesterday's low as the short. Otherwise, through today's high, I think is probably a good buy point. Stop at the 20-day and manage your risk there. We are in a momentum market. So that's going to be the daily recap for Wednesday, September 17th. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any stocks that I personally trade, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great night, and I'll see you guys in tomorrow's video.